If you've been following the housing market this year, you know it's been a bit of a roller coaster. Not the wild, unpredictable kind we saw in 2021, but more like that slow climbing coaster where you can feel the tension and everyone's watching to see where things are going next. This month's number from the Ottawa Real Estate Board tell a very interesting story, one of stability, resilience, and cautious optimism. In October, we saw sales tick upwards. Prices stayed pretty steady and inventory began to ease. Those are all healthy signs as we transition toward the slower winter months. So, today I'm going to walk you through exactly what's happening behind the scenes. Number one is what the numbers actually mean for Ottawa buyers and sellers. Number two is why our market remains steady despite all of the economic uncertainty. And number three, what we might expect as we move into 2026. So grab a coffee, settle in. This one's full of insights that'll help you make sense of where the market stands right now. Let's get right into it. Let's start with the headline. Sales are rising, inventory is easing, and prices remain firm. In October, 1,177 homes were sold across Ottawa. That is 8.1% more than in September. That's because September had been a bit quieter, and an October uptick shows that buyer activity didn't vanish when the leaves changed colors. Now, year over year, sales were down just about 1.2% compared to October of last year. That's a tiny gap, essentially pretty well flat, which tells us the market is holding its ground, even as buyers remain cautious about the interest rates and the affordability. So, yes, there is movement, not explosive growth, but steady, meaningful activity. In plain language, Ottawa's market is saying, I'm fine, thanks for asking. How about the price trends, the real story? Let's talk about prices because that's what everyone wants to know. Are home prices going up or are they going down? The average sale price in October was just a little over $709,000, which is up by 2.7% month over month and a 5.7% higher than last October. That is a solid number. And remember, we're not seeing dramatic swings anymore. We're seeing steady and measured growth. Now, a few years ago, prices were jumping by $50,000, $100,000 year over year. Those days, they're behind us. And that is a good thing. This current trend is a lot more sustainable. It means the market is finding its footing. Buyers aren't panicking and sellers aren't desperate. They're realistic, and that's what leads to balance. So if you bought a home a few years ago, you're likely still in a healthy equity position. And if you're thinking about buying now, you're entering a market that is calmer and a lot easier to navigate. Now let's shift gears to listings. In October, Ottawa saw 2,405 new listings, which is 15.1% fewer than September, but 13.4% more than last October. That seasonal drop between September and October happens like clockwork every single year. The kids are back in school, families are settling in, and sellers who didn't list by mid-September will often hold off until spring. But here's where it gets interesting. Active listings. The total number of homes for sale dropped from 4,388 in September to 4,232 in October, a 3.6% decline. That's the first time in a few months we've seen inventory pull back a little bit. And even though the inventory levels are still higher than in previous year, that decrease tells us the flood of new listings we saw earlier in 2025 is finally leveling off. We are not drowning in inventory anymore. We're finding that sweet spot again. That's what creates a balanced market. one where buyers can have choice, but sellers aren't competing with 20 other listings on the same street or in the same neighborhood. Let's talk about supply, demand, and market balance. Another key metric we closely watch is the months of inventory. This number tells us how long it would take to sell every home that's currently on the market if no new listings were added. In September, we were sitting at 4.0 months, and in October, that eased to 3.6 months. That's a subtle but meaningful change. It suggests the market tightened slightly. There's still a good supply, but it's being absorbed by a healthy pace. For reference, anything between 3 and 5 months is considered a balanced market. Under 3 months, seller's market, and over 5 months, it's a buyer's market. So we're comfortably right in the middle of that. And that's why you'll hear me say this again and again. Ottawa is one of the most stable real estate markets in the entire country. Let's talk about one of the biggest factors influencing buyer confidence: interest rates. At the end of October, the Bank of Canada made its second consecutive rate cut, lowering the policy rate by 25 basis points to 2.25%. I did make a video on that. I'll link it in the description below if you want a little bit more details on that one. That is great news for borrowers. It gives a little breathing room to homeowners renewing mortgages, and it brings some buyers back who had been priced out. However, the bank was very clear. This is probably the last cut in this cycle. The future will tell. They don't want to overstimulate the economy, so they're holding steady for now. But even so, we're already seeing a renewed optimism. Mortgage brokers are reporting more inquiries, and pre-approvals are climbing again. That's exactly what we expected to see. People taking advantage of lower rates to lock in and start their home search before spring. So if you've been waiting for rates to drop before making a move, consider this your signal that the window might be opening. It's not about rushing in, but it's all about preparing smartly so you're ready when the opportunity knocks. Now, something that makes Ottawa different from other Canadian cities is our strong federal employment base. The Ottawa Real Estate Board noted that they're closely watching the new federal budget and workforce announcements. Why? Because changes in government spending, hiring freezes, or departmental cuts can directly influence our local housing market. If the federal workforce grows, demand for housing rises, especially near downtown and in established neighborhoods like Alta Vista, New Edinburgh, and Glebe. If we see cuts or reassignments, that can temporarily soften the demand. Right now, though, the tone is steady. The government sector remains stable, which helps keep Ottawa's real estate market insulated from the big swings we sometimes see in other regions of the country. Now, let's take a quick look at the bigger picture, how we've performed so far this year. From January to October, 12,197 homes were sold, which is 3.3% higher than the first 10 months of 2024. The total dollar value is sitting around $8.55 billion, which is up by 6.5% year over year. And the average price year to date is $700,869, a 3% increase from last year. Those are strong, steady numbers that show confidence returning to the market. We're not breaking records, but we're seeing progress. And that's what you want in a stable real estate environment. As we approach year end, we're heading into 2026 with good momentum. How about the MLS Home Price Index, which helps us see price trends more accurately than averages? In October, Ottawa's HPI composite benchmark was $622,700, slightly down by 0.7% month over month, but up 0.7% from last year. So again, the theme here is stability. Now, when we break it down by property type, single family homes, the price is $692,400, up by 0.3% from 2024. Townhomes, $456,300, up by 6.6% from 2024. Apartments, condos, $402,900, up by 0.1% from 2024. That is a clear indicator of where demand is the strongest. The townhomes continue to be the sweet spot, especially for first-time home buyers and downsizers who want space without the cost of a detached home. Not too big, not too small, just right for a lot of Ottawa families. What this means for buyers and for sellers. So what do all these numbers mean if you're thinking of making a move? If you're a buyer, this is a moment of opportunity. Rates are lower, inventory is still strong, and you have good negotiating room. Yes, prices are stable, but they're not surging. So you can take your time, do your due diligence, and buy with confidence. And if you're a seller, the key is presentation and pricing. Buyers today are informed. They're comparing homes online before they even book a showing. Homes that are well prepared, well priced, and professionally marketed are still selling quickly, often within days. And with inventory beginning to tighten, you may find that serious buyers are out there ready to move before the snow flies. As we head into November and December, expect things to slow slightly. They always do every single year. But this winter will be interesting. We've got slightly lower rates, motivated buyers, and sellers who are realistic about their pricing. That is a recipe for healthy activity, especially in early 2026. So if you're planning to sell in the spring, now's the time to start preparing your home. Decluttering, refreshing, maybe even booking your stager and photographer in advance. And if you're buying, talk to your mortgage broker early. Lock in a rate, get pre-approved, and start browsing neighborhoods so you're ready to act when the right home comes up. And now it's time to wrap it up. Ottawa's market remains one of the most stable, reliable, and balanced in Canada. Sales are up, inventory is easing, prices are solid, and confidence is quietly building again. If you're wondering what these numbers mean for your personal situation, whether you're buying or selling, or just keeping an eye on the market, I'd love to chat and look at your goals, your timing, and what strategy makes the most sense for you. Thanks for taking the time to watch this video. If you found it helpful, feel free to share it, hit the thumbs up, and don't forget to drop a comment below letting me know what you're seeing in your neighborhood. And don't forget to subscribe to my YouTube channel for more straight talk on real estate. I will see you in the next video, but in the meantime, if you have any questions about the real estate market in your specific area, make sure to give me a quick call, or you can always email me at jeanricher@jeanricher.com. Merci beaucoup et bonne journée.